The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Looking good, Billy Ray. Feeling good, Lewis. This is Larry Pesavento setting in for John Logan today. Hopefully we'll have John back on Monday. He should be fully recovered. If not, we're going to send out the paramedics over there to the Philippines and drag his scrawny little keister back here to get him back to work again. We sure miss him. Okay, we're going to walk through a couple of things. The first chart that I posted in here today is the NASDAQ. I just wanted to go over where we think is what's happening. And remember, this is all technical stuff. It has nothing to do with fundamentals. But we finished that big ABCD pattern down there on the 28th. That was the day after we had the lunar eclipse and the full moon, one of the most beautiful full moons we've seen in a long time, because the moon was at perigee at that time, as close to the Earth as it gets, making it look 16% larger. Remember that Pythagoras had that stuff figured out back in 600 BC when the rest of the world thought the world was flat. So it's a real accomplishment for that gentleman for sure. Okay, we're in the midst of a rally here, folks. I don't think there's any question about that. Yesterday was a perfect example of it. We had a really big move upside overnight, and then, as always, when the market opens sharply higher or sharply lower, it reverses. And the Dow Jones pulled down to a 61% retracement of the range that we had on Tuesday. We did the exact, or Wednesday, and the exact same thing happened with the S&P 500. The NASDAQ was also pulling back to a 61% retracement. And then, of course, it rallied back the last hour and a half and has continued on. We have some targets up above the market here. Our original target, if you remember, was at 1918 to 1920 in the E-mini futures. We got to 1924 day before yesterday. That was on Wednesday, and then we broke down Wednesday all the way down to 88, which was a 61% retracement, and that sets up another target up there at 1955, which would be the big ABCD, and it's probably will come in, if it doesn't come in today with this jobs report, which somebody might have leaked it because the market has popped up here quite a bit. So we'll see how that's going to last. But we'll wait and see, what happens with it at that time. Now, the number on the Dow comes in at 16,300. Remember, folks, now, when we get to these numbers for these rallies, we're still almost 200 handles lower in the S&P, and we're well 800 points lower, and that's if we hit it, which we should. But that's 800 points lower in the Dow. So that's just another big ABCD. So if you see the ABCD on the downside, like we saw in the NASDAQ, the S&P, and the Dow, you would expect it to happen on the upside because the market's doing the same thing over and over again. It's just doing a mirror image of it. When it makes it bottoms, it makes the ABCDs on the upside. When it makes the ABCDs on the upside, then it turns around and goes back to the downside. That's what technical analysis and pattern recognition is really all about. So those are some of the things that we're watching here this morning, just to, to keep an eye on what's really going on. I want to put this chart of the NASDAQ to show you we're about 70 handles away from that level. That comes in right about 42.89. We're trading at around 42.15 right now, about 70 handles away. That's a 61% retracement of the high that was made back on the 17th. And remember, that was a secondary high, because the high to bring this in from the whole thing would put the 382 there at that level. So this market has been down quite a bit. We're having a counter trend rally, which we've had several times, and this is one of the larger ones. In fact, it matches the one that we had into September 17th, if you remember when the Fed did something. And maybe the Fed's going to do something today. Maybe today's the day they're going to raise interest rates for the first time in 9 years. The bond market's been telling you they've been raising rates all along. They just haven't told anybody. So we'll see if that's going to be the case with this. So we want to watch this as close as possible. Now, the next one that I wanted to show you, excuse me one second, folks, in the market here, is the one on the Dow Jones, and I swore to myself I'd have these lined up, and I darned if I can't find it again. Boy, this is sad when you have a senior moment like this. Give me 1 second here. It'll pop up here in just a second, and I'll be able to look at it. Okay, the next order of business is I wanted to share with you something that we talked about over a week ago. And that was the work from Steve Moore of Moore Research up in Oregon, not very far from where those folks were killed yesterday. God let rest their souls, and hopefully families will meager through this, but that's very, very sad. I've been to that area many times up in Umpqua. The Umpqua River is in just south of Portland. It's a really beautiful area, and I had a good friend, or I still have a good friend, and still has a place there. He had a cabin on the Umpqua River, and we used to go up there and go fishing and stuff, and always had a good time in that area. So I know that area of Roseburg, Oregon very well, and it's amazing because I remember we were river rafting down that river, this is 20-some years ago, and we were going over some trees, through some trees, and a snake fell out of the tree into the boat, and I swear to God, that's probably the scariest I've ever been. I don't like snakes, and to be in a river rapids, a pretty good-sized river rapids, too, with a snake in the boat is not a great feeling. Anyway, we were able to get it out of the boat, and it was not a fun experience, but when I saw that stuff, it really made me aware of, how fragile life can be at some times. Guess what, boys and girls? I found the Dow chart. Thank you very much. The old technical picture still comes in. Okay, here's the Dow. You can see we hit that major support down there on the 28th. That was a beautiful, perfect 61% retracement in the Dow Jones. It was a beautiful Gartley. It was a 3-drive to a bottom pattern. Spot on, hit the exact number at 15,800. The low on the Dow was 15,799, I believe. So it was pretty much spot on of what we're looking at. Then we had the big rally yesterday. As you can see, we rallied all the way up, and then the Dow broke down 400 points because we're starting to see this great volatility. It stopped at the 61% retracement yesterday, and now is pointing towards 16,500, and we're trading at around 163. So we got 250 points more to the go. Maybe this is what'll happening today, but the key time frame that we're watching now is October 2nd. There should be let's try that again, Larry, October the 6th. That's on Tuesday. So let's watch this very, very closely. Today's a really important day for me because back in 1987, I was buying put options in the market. And I was buying October options with 2 weeks to go. They were very, very cheap. I mean, I bought them way out of the money, at least I think at 200 Dow points, and that's when the Dow, that was like a 10% move in the Dow, and they were very, very cheap. They expired on October the 16th, the Friday before the crash. The Dow was down 106 points that day. My puts closed right on the high of the day. I had to, get out of them, and of course on the close. And I was so happy that day on the 16th because I had made a great deal of money, and I was really very, very happy. And so that next Monday morning, had I had November puts instead of the October puts, I could have multiplied it by 20. But I was still happy, and I still had some futures, of course. But the puts that I had were a special situation that seemed to work out okay. But I remember that very, 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 very vividly. And anyway, those are just things I had to remember. A little senior moment there, boys and girls. Okay, that's what we're basically looking at. Now, I had a question about when these markets when these markets really go ballistic. I posted the chart for the Steve Moore? I'm sure I did. Yes, I did. Anyway, take a look at that Steve Moore's work. Steve Moore is, then I got off on the tangent of Oregon because Steve lives up that way. In fact, Jim Twentyman goes up to visit him quite a bit. They both ride bikes and they're outdoorsy types. But that Steve does a lot of pattern recognition cycle work, and that's what he's looking at here. He's comparing the 1995 market to where we are now, and so far this has come right in. The bottom came within a day or two of where he thought it was, and this might be the major bottom, folks. You know, there's a possibility that this old cowboy has got it all wrong, and this is not a really big bear market. I don't think so, but that's what we're looking at. Now, we have this jobs report today, and we all know how they play that game. Not that if they ever let out any information or anything like that. That could never happen because that would be illegal. But we want to watch to see how this report is going to affect the market, just like everything else. Remember, the Fed is in the background, ready to raise rates. My guess is when they finally raise rates, that's probably going to be relatively bullish short term. But then again, you don't know because we haven't had a rate increase in 9 years. I don't think if you were an economist or a trader that if someone would have told you that 8 years ago that there would not going to be an interest rate increase for 9 years, you would have thought that they were, you know, 2 French fries short of a Happy Meal. And I would have to believe that because what they've done is tried to extend out the business cycle, you know, because of all the problems that we had in 2008. And, you know, it's a big experiment. You know, I personally think it's going to end badly, as does Carl Icahn and maybe a few other people. But, you know, it's an experiment, and so far it's acting, you know, very, very well so far. Someone has asked me a question by email about the Volkswagen. I've talked about it. You know, they were down again another 4 or 5% yesterday. I didn't get a chance to check it today, but, you know, this stock looks like it. You know, looks like it wants to go even lower. It's down over 40% in 3 days from last week, 4 days since last week. So that doesn't look like it's going to be very, very helpful. Also, the stock of Deutsche Bank has had, you know, a little bit of a bounce. I mean, when I posted this chart last, it was down at 27.41. We're still below 27, so the market hasn't even rallied, you know, more than a half a point, you know, during this time frame that we have going on right now. So we want to really be watching it very, very closely, and we'll see what happens. What's going on about some of these companies over there that are having a lot of these problems, and then we'll see from there. We'll be right back after these words. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Logan, John should be back Monday, and we'll see what happens. Now, I've posted into the Tiger Den the chart of the E-mini S&P showing you what I tried to describe after we had the bottom that formed on the 28th. You see we had this explosive move all the way up to 1925. It hit 1928, I believe, last night, and then we backed off to 1988. We came off 40 handles, which was at a 61% retracement, and then now that sets up the ABCD up at the 1958 level, which we're expecting to come in on October the 2nd. Let's try it again on Tuesday, October the 6th. Today's October the 2nd. So on Tuesday, that's what we're expecting. So I don't know whether the jobs market's going to make this thing take off again, which it certainly can, but we'll have to wait and see, what's going on. The other market that's interesting, of course, is the bond market. The bond market actually got above the 158.10 level. The 1.618 on that number was at 158.15, and we went a couple ticks above it, and then we backed off a full point. But on the downside here, it's also stopped. So it's in a really tight range. The German bond is actually acting pretty strong compared to our Treasury bond. The charts look very similar, but the German bond is just a little bit more bullish from a technical standpoint than our bond is. And folks, this interest rate thing has been a giant experiment. So believe me, no one knows what's going to happen next. And so it will be volatile. I don't think there's any question about that. And just try to, keep calm during some of these things. And it's going to come as a surprise. Believe me, the Federal Reserve is not watching your back. I can promise you that. So try to protect yourself either way the best you can. And so, look at it. The problem with some of these things that you're looking at, like, for instance, our ETFs, the ETFs only trade during market hours. They don't trade 24/7. And so what you're looking at is a situation where, like we had yesterday, with stocks up 150 points or 200 points, in the middle of the night. And yet when they open, the market is actually unchanged to down. So, there's a big difference can happen to that when you're watching those positions. I think the best thing to do, this is what I'm doing. This has kept me alive in this business a long time, especially when you're looking at these futures that we trade. We want to see what the real market is doing, the real cash market where, real money is being played. And you'll see here, if we look at the NASDAQ, the New York Stock Exchange Index, we had the big run up into the 17th where we completed a perfect Gartley pattern up there at the exact number. That was when the S&P got up to 2012. And the NASDAQ got to 44 and change. And then you see we've come down. And really, this thing is not really done very much, since that time. That's the key to what you're looking at. So you've got to be, really careful of what's really happening. There's nothing else you can do, just to wait and see. But the overall market, is really doing not very much. It's just the 531 stocks, the 500 S&P stocks, and then the 30 stocks that are in the NASDAQ that are making this thing run. And remember that we've got a situation where we're looking at only those few stocks, and that that's not really indicative of what the market's really doing. But if you're trading futures, you've got to pay attention to it, because these things, they run like, striped deer, and deer can run pretty quick. So you've got to be very, very flexible in here and pick your shots. And, that's the bottom line of, what we're watching here at this particular time, coming into the jobs report, which will be in looks like about 70 seconds from the old time on the wall here. We'll see what happens. We'll be on a break, of course, when that's on, and then we come out. We'll see when all hell breaks loose, and we'll see what's going on. We'll take a quick peek here at the oil market. It may or may not be affected here by the jobs report. I frankly don't think it will be. We've been in a real tight range here, but we've completed this 135 pattern, so it wouldn't be unusual to see a rally here up around another $1.50 or so in that oil market. So that's also a possibility. One other thing that's happened overnight is that platinum made another new low down at the 1.618 level and has bounced from that level. So that could be a little bit of strength for the metals. So we'll take a break here after the jobs report, and then we'll count up the pennies, and we'll see where we stand.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
But he's doing better now, so it's back. Okay, looking good, Billy Ray. Feeling good, Lewis. Well, no surprise city today. The jobs report wasn't as good as everybody thought. We've sold off about 100 and some points in the Dow Jones, and the bonds were the big ones. I was mentioning this when we were talking, the fact that the bonds were acting very, very well, mainly because of the German bond was so much stronger than the regular bonds. And, you know, once we went above the 158.05, that really negated the very scenario. That makes us, we're going to hit, in fact, we just hit the 786 up here at the 159.20 level. So that's going to be a real interesting spot to keep an eye on. So I still feel that we're going to have a strong trend change day on October the 6th. That's Tuesday, whether it's a low or a high. In the market, I'm not sure as of yet because of this volatility that we're having. You know, 100 points up, 100 points down in the S&P doesn't, well, 50 points in the S&P and 200 or 300, 400 points in the Dow Jones. It's going to be easy when we get to October the 2nd because the pattern will be there. The problem is I don't know whether it's going to be a high or a low. That's the main thing that we're watching here today. So we'll see what's happened. We've had a pretty good jump in gold, around $20 an ounce. And boys and girls, I got to tell you what I did today. You might hang up on me and never be on the show again. But I bought gold today at 11.05 1105.20. That was the low of the day was 1105.10. We made a low at 1104.50. And this old cowboy, I don't know if it was being tired or what, or just being nervous or what it was, I decided to scratch the trade. And it's gained $1,500, but that's neither here nor there. I did have some bonds and had some euros, so that helped a little bit. But anyway, we'll see what happens with some of these markets. Just remember that all of these things are just patterns, and you make mistakes all along, and you got to get up and go on to the next one. Whenever you do that, there's nothing else that you can do. You just got to shake it off and move to the next. Sometimes they work in your favor, sometimes they don't. That's the bottom line of what we're watching. But we've dropped 30 handles in the S&P in a matter of 5 minutes here, so there's a little bit of selling coming in. And remember, the market is now far overbought. It's not oversold like we were back on the 27th and 28th. We've had a really strong rally coming in from that area. Overall, the market is extremely bearish. I've posted the breadth of the market every day, and it just doesn't look very good. And especially when you look at the New York Stock Exchange Index, what the real stock market is doing, and then we'll see what happens, with that. I had a beautiful chart that I wanted to show you. It was the live cattle chart. And I was really hoping to, and I know it's here somewhere, but I can't find it. I'm going to try to find it here when we come up with the next break. But basically, Rich Anderson from Anderson Capital Management is our guest quite frequently on the show here because we've been friends for 50 years. He's not only a cattle rancher, he's a hedge fund manager, and he's also a super broker. He's a broker to the big boys, and they do a lot of trading. And believe me, Rich has been spot on this cattle market for about 7 or 8 months. And we talked several times, and we really thought that the bottom was going to be at that 134 level in cattle. And of course, we knew that if it went anything below 133, there was in big trouble. So that's what the stop was. Well, I've got the chart in here, but I can't put it in here, but the market has gone from 133 to 120. It's dropped 13 handles. Now that's a lot of money in cattle. That's $5,000 a contract, and so that tells you just pretty dramatically that some of these things are, you've got to put a stop in to tell you that hey, this is this is where we circle the wagons, and when you're wrong, you just got to step out and take a look at it. Now, on the other side of the coin, we've had one really good winners this week here for the folks here at TFNN, and that is the Canadian dollar. We were looking for a big top up here in the Canadian dollar early in the week, like on Tuesday when we were trading at 134.20. We just broke the 132 level, so that one has made over $2,000 in a matter of 3 days, which is okay. We're hoping that now you put your stop at break even and buckle up and see what happens, and you lower your stop down a little bit each day to protect profits. But that's what you try to do, folks. The best people in this business that do pattern recognition, the best they can do. Some people do really good. I mean, I do okay. I try to be right about 60% of the time. I'm wrong about 20% of the time, and 20% of the times I try to get to break even, which today, like the gold, was basically a break even trade. And I could have kissed the Pope's ring on that one, but I didn't. So that's basically the bottom line. But remember that each trade that you're doing, you're making more money than each trade that you're losing. You want a sharp ratio of about 1.5 to 2 for each dollar you're risking. You're making $1.50 to $2, and that gives you a tremendous edge. And that gets you through the periods where you have the market going against you. 3 days or something like that, where you don't do anything, you can't find a winning trade if you fell on it, and against the times when you're basically feel like you're invincible. But I will tell you this, after those invincible times, the old sickle, the man with the sickle and the cloak is right behind you, the old Mr. Death. When I was doing my book, Private Thoughts from Commodity Trader, when Mark was writing his book, Trading in the Zone, in our office in Tucson, I had a tremendous run of 19 days where I had not had a losing day in 19 days, and these were good days, and that was not $50 or $100. Some of these were pretty substantial, and this was the day I had 6 trades lined up, and I told Mark, I said, Mark, look at these 6 babies. I said, this is going to be like shooting fish in a barrel. And he put his hand on my shoulder, and he said, the streak stops today. And I said, what kind of baloney is this? And he said, no, I'm just telling you. He says, I've been watching this forever. He said, I know traders. He said, you've got the confidence, all the patterns are there, but this is going to be the day. And I says, baloney. And I said, and I bet him $100 that I was going to be right. I was 0 for 5. All 5 of them lost, and we never let me forget that. God bless his soul. But that was one of those times that you don't really know what's going on. If you liked Yogi Berra, he just passed away last week, one of the greatest human beings. I was fortunate enough to meet him a couple times. But one of his favorite sayings was they were interviewing him during the Yankee game against the Dodgers. And he said, he said, I can understand how Sandy Koufax can win 23 games in a season. He says, what I don't understand is how he lost those 5 games, because he was 23-5 that year with an earned run average of 1.2 something, I believe. And the 5 games that he lost, the Dodgers scored a total of 3 runs in the 5 games. They were shut out on 3 of the games and only scored 1 and 2 runs in the other games. Otherwise, he could have been 28-0. But anyway, that's neither here nor there. But anyway, this is what you got to realize, that when you feel like you got it and this looks like it's there, maybe you do, but you always got to protect yourself from old Mr. Surprise, who's usually standing right behind you. So remember that. Streaks come and go, and we'll see what's really happening. Wow, gold 11.27. Shut the front door and raise the rent. I'm going to be thinking about that one for a few days. Oh well. Who knows? Still got a little silver, so that's all right. Anyway, well, silver's moving up too. It's at 14.90, so that seems to be okay. The bonds are really screaming, which is really good. We've got the NASDAQ down 42, the S&P's down 19, and that's about it. So we'll see what's going on with the rest of these things here, and we'll go from that level and see what happens. What's amazing here is the DAX is still up on the day, with the R futures selling off quite a bit. So whether that'll have much of an effect overall, we'll have to wait and see. We just hit the big time 786 up here in the bond market. So keep an eye at this 160 level, folks. That's a really big number. Also, we need to look here at the gold here. In fact, if I were in the gold, I would certainly be tightening up my stop, because we've already completed in a matter of a few minutes here. Just a second here. 1 second here. Yeah, we just made a 50% retracement of the high back on the 24th, which is interesting. But I did want to show you the pattern on platinum. Someone has asked me to. Oh, I know I have it. Oh, here it is. Yeah, I did bring that one up because I had a request for it, and I don't trade platinum, so I put a little notice on this. You'll see. We'll see where we are here at that level. Now, someone's asking the question if it's a buy on the E-mini at 1891. I really can't say that, because the trend is not the trend. The bars are so wide. Wide bars are the nemesis of a pattern recognition trader, because it brings the unknown into the theory. You want to be able to see a nice, orderly, calm market. When you see these really long-ranging bars, that means danger. The old word in Mexico is cuidado. You see it on all the roads. There's a big sign that says cuidado, meaning danger for potholes or animals, whatever it happens to be. So every time I see that, I always think of cuidado, because that's where the danger really rise. That's like when cattle go limit down. That's telling you, danger. There's more selling that comes down as the market keeps dropping and dropping, and it falls, until it gets to a point where, it's not going to fall anymore, and then it actually turns around, and that's it. I remember that very vividly because in 1974, when I had lost my first fortune, I lost everything in a matter of 8 weeks buying things on the way down. But I was just a kid, so I knew I could make the money back. But the market was limit down in cattle, it was limit down in corn, and limit down in wheat, and those were my last positions that I had on. And remember, this was before the CFTC or the NFA, so that the brokerage firms decided whether they could liquidate you or not. And I went to a negative balance from about 900,000 to minus 2,700 on that day in October 1974, and it was my decision because they told me to hang in there. They said don't worry about it, and so I'd taken a lot of money out, but I was didn't have what I had before, and so I said, well, I better knock it off here at $3,000 and come back easily because I had taken a lot of money out of the market. But that day, 10 minutes after I was taken out, the market reversed and closed limit up and everything. So I was 10 minutes away, but frankly, it would have been a disaster anyway, because that 10 minutes made me not trade for well over a year. And that's when I found the Gartley pattern and got to really understand more of, Fibonacci analysis with the help of my good friend, John Hill, and my mentor, who's 89 and still trading. And so that's what you learn. See, because some of the, most dangerous things that happen to you can be a blessing in disguise. The old adage is, when God closes a window, when God closes a door, he opens a window, and I'm sure that that's pretty much the same thing. You can see the platinum. We went down there, and if you notice on there that it's not for trading, only for observing, that's just because I don't trade platinum. I trade gold and silver, but not the platinum. Now, the silver held, quite a bit above the old lows. It got down to 1435 today. There was some support there at 1440. There was a 1.27 there in the silver, and it had been holding up better. And so all this is just a first run of the rally here, folks. If this is a big move in gold and silver, it's going to give you plenty of times to get in. Just watch for an ABCD move, counter trend. It'll either come in at the 382 or the 50%, and you'll see, what happens to see what's going on. We'll see what happens. But there's a chance that this is a major bottom, but we'll have to wait and see if that's going to be the case. There's a couple of questions that people have asked me about Europe with the Volkswagen and Deutsche Bank, and I was fortunate enough to have a lunch yesterday with my good friend Byron Tucker here in Manhattan, and he told me that wasn't really a very big surprise with Volkswagen. He said he had heard about it before, and I said, my question is, okay, maybe everybody heard about it. Why is the stock down 40% in 4 days? And his comment was, well, not everybody's heard about it. Well, that's evidently the truth. So, but he said that the fine was going to be $11 billion, and he said that wasn't going to be a lot to Volkswagen. And I'm thinking, well, maybe $11 billion is a little more than they think it is. They're the largest employer in Europe, of course, with 600,000 employees, and they're by far the biggest, company in Europe, also all of Germany. And then Deutsche Bank is also having, big problems. And, that doesn't bode well, for what we're looking at here. So we'll just have to wait and see, what's going on with some of these things. So I hope some of this information is helpful to you, but it's just word of mouth. Let the charts do your talking, because, they don't lie to you. That's a good part of being a technician, is that if prices are going up, there's more buyers, and if prices are going down, there's more sellers. That's basically the bottom line of what we're watching here when we're looking at some of these things at this point. Wow, look at the gold, just made the 61% retracement. They must be listening to me here. Okay, folks, I'll be back to wrap it up in just a few minutes, and then I'm going to follow up with my show at the top of the hour.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, folks, we've had some activity today following the Fed, not the Fed, but the jobs payroll, whatever number it is, non-farm payroll. As you can see, the markets, we've dropped 34 handles in the S&P, dropped over 100 handles in the NASDAQ. So people are asking you where the support is. When you got really long bars like this, it's really hard to really pick a spot. So wait till the market settles down a little bit. Should get a rally back because it's still having some big bounces, in this area without any trouble. But we did hit the 61% retracement in gold up here at 1136. That was coming off that high at 1157. That was spot on, 61% retracement. We hit the 786 retracement in the bonds on the daily chart at 160. If you remember, that was a really big area. So we're rocking and rolling here with major levels here today. Now we've got a key date coming in here on Tuesday, October the 6th. That's on a scale of 1 to 10. That's about Mary Lou Retton, about a 9.8. So we got to watch that date for, I was thinking it was going to be high given the fact that we were so strong last night. But with this information, I guess it's pushed it down. We could be looking at an important low down there on October the 2nd. But the overall stock market, still based on the New York Stock Exchange Index, still looks like a flying Melinda to the downside, boys and girls. It really does. I mean, there's more selling going up on these rallies than there is buying. It's only the few stocks, the 531 stocks that are in the S&P and the 30 stocks in the NASDAQ and the few stocks that are in the Dow that they're in all those indices that makes the market go up. The rest of them, don't do very much at all. So we'll watch it, really, really closely in here. So far, we've rallied 10 or 12 points in the NASDAQ and about 4 or 5 points in the S&P. So it's still, relatively quiet in here yet early this morning. So just give it a little bit of time. If you want to fish for a bottom or look for a top, wait for a small ABCD pattern, I think would be the best way to trade that, given the fact that we've had so much volatility here with the non-farm payroll. One of the factors in this non-farm payroll is we've seen all the layoffs this week from Caterpillar, and so many of the other companies are, laying off people, and that's not a very good sign when you got people, wanting to get a job. Evidently, the place that's really having trouble is Germany, because they have these 300 or 400,000 refugees in there, and they're all basically untrained labor people, and that's just not what they want at this time. They need high-tech people, and so they're going to have to either clothe them and feed them somehow, because this is not going to be an easy situation, and many of them are adult males, and that can lead to a very volatile situation in Germany. We have some friends there, and they've warned us that that's the thing that they're really afraid of, is that they might have to put these folks in camps, and in camps, this is where the gangs come out, and they can be very, very violent, especially when they're young and they don't have anything to lose. It's going to be a very volatile thing in Germany and all parts of Europe, for some time to come. Much like what happened in the United States back in the 1800s with the Irish gangs and the Italian gangs in the new city of New York City. So that's really an amazing thing to look at. So I'll be back to finish my hour at the top of the hour. Be pretty much the same show. I'll have a few little extra charts to look at possibly. I certainly want to bring that cattle out, because we got to tell Rich that, hey, Lucy, you got some splaining to do, as Desi would say to Lucy when she did something wrong. And believe me, Rich did nothing wrong. He warned that if it went below that, that there was going to be problems. So we'll have a good idea when we talk to him next week. 877-927-6648. Larry Pesavento sitting in for John Logan, who will be back Monday. May God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.